let's continue in this third video where we left off the previous time. So if we look at the definition of lease payments, you will see that you have to consider quite a few number of items. First one is fixed payments, so that will be the same payments that you'll make either monthly, yearly, quarterly, and so forth, minus any lease incentives that the lessor maybe will pay over to you, plus any variable lease payments, purchase option payments if we are reasonably certain we will pay this amount, any penalties for the termination, plus the guaranteed residual value, minus payments for non-lease components. So very important here is to know that in the definition of lease payments, the guaranteed residual value is already included in here. So the residual value will be like your final payment at the end, and normally that will be your future value in your financial calculator. The guaranteed residual is the lessee, where the lessee or its related party guarantees the final payment. So if the lessee guarantees to the lessor that the underlying asset will have a certain minimum value at the end of the lease, then any amount that is expected to be payable as a result of this residual value guarantee would be included as a lease payment. So your gripping carp gives a good example in paragraph 9.3.6, which says a lessee guarantees that the underlying asset will have a value of 100 Rand at the end of the lease. However, at the commencement date, the lessee actually believes that at the end of the lease, the asset will only have a value of 20 Rand. This lessee will need to include then in the calculation of its lease payments an amount of 80 Rand, because it has guaranteed that the value will be 100 Rand, but it expects the physical asset to be worth 80 Rand less than this, which means that it will be expected to pay the 80 Rand in order to honor the promise. The unguaranteed residual value is a value that's only known to the lessor, as it is not guaranteed by the lessee, or it's only guaranteed by a party related to the lessor. So not the lessee, any other party related to the lessor. Very important to remember for third year, fixed lease payments is included in your syllabus, variable payments not, residual value guarantees, yes, included. The reasonably certain exercise price purchase option is not included for this year, as well as termination penalties. If we continue with our definitions in Appendix A, our contingent rent will be lease payments depending on or varies according to uncertain future events or factors. And this is always recognized as an expense regardless of the type of lease. Lease incentives is the payments made by the lessor to the lessee associated with the lease. So they want to actually make it more promising for the lessee to enter into this lease transaction. So therefore they will maybe make promises or reimburse the lessee or make payments to the lessee. The economic life of the asset will be the total useful period of the underlying asset. Initial direct cost will be incremental costs that are directly attributable to negotiating and arranging the lease. So you had to incur these costs in concluding the lease agreement. The implicit interest rate is also a very important definition. It's the rate of interest that causes the present value of the lease payments plus the unguaranteed residual value. Why not the guaranteed? Because the guaranteed residual value, we've just said, is already included in the definition of lease payments. So if it says present value of lease payments, guaranteed residual is already included in here, plus then our unguaranteed residual value. So that should be equal to the sum of the fair value of the underlying asset and any initial direct costs paid by the lessor. So my present value will be my fair value plus any initial direct cost paid by the lessor. My payments will be the yearly or monthly payments that I will make. My future value, do you agree, will include both the unguaranteed and the guaranteed residual. And then my N, I will be able to find out what is my lease term, and I will comp I, and that will be my implicit interest rate. The lessee's incremental borrowing rate will be the market related rate that you will use if you are not able to know what is the implicit interest rate. So here I've just said again, very important, the interest rate implicit in the lease is the rate that causes the present value of the lease payments plus the unguaranteed residual value. So if I discount this, it will be equal to my fair value plus my initial direct cost of the lessor. If available, it's from the lessor's perspective. Why? The lessor will know what was the initial direct cost that they've incurred that they have to add to the present value. Also, they know what is the unguaranteed residual value, because remember I've said the lessee does not know anything about this unguaranteed residual value. So the lessor will be able to know what is the implicit interest rate, and therefore the lessee must find out from the lessor what is the implicit interest rate. Very important that you use the nominal rate and not the effective rate. So here I've given you an example. 100 Rand earns interest at 10% per year compounded semi-annually. So what is our interest for the year? Every 6 months the interest will be compounded. So 6 months of interest 10%, that will be 5 Rand. So for the next 6 months it will be 105 then, that I will use to calculate my interest for the next 6 months. So this is then our effective interest rate. If I want to calculate the nominal interest rate, I will actually have to say the number of times interest is compounded, so 2 times during the year, second function, and this APR you will find on your financial calculator. Press that, put in your interest rate, the 10.25, and I'm sure you will get to the 10%. So please make sure that you know how to use your financial calculator, especially with leases. And in an exam, the question will specify if it is the nominal rate or not the nominal rate. If not, you assume it's the nominal rate. In the next video, we will look at recognition and measurement.